Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, December the 16th, the year 2018. Let's talk trading. Weekly open and gap. We start off with money and risk management. We're halfway through the month. I know you've had stellar money and risk management and will continue to do so. And looking at the monthly, you can see Euro Yen pushed back down below previous month's midpoint. But let's get to the gaps. Oh, hopefully the early bird looks like caught the worm, so there's only one gap that hasn't filled. So I hope you traders out there took advantage of this. Actually, I don't know how many of you are trading these because I haven't had much response. So maybe you're keeping it to yourselves, or maybe people on this side of the pond aren't participating because they don't feel like trading on Sunday. Might be watching football or something like that. So you can see we're 24 pips above the open. We opened slightly in that lower wick zone of the previous week. And you can see we're now into the upper wick zone of the previous week. Look for price to hit this 28.61 here, previous week's midpoint. On the daily, same thing. We opened in the lower wick zone and we popped out. Big candle. Look for this candle to fill, or actually look for the price to get back to the open at this candle. And maybe, possibly, in the next day or two. As you can see here, it took a while. It took 1, 2, 3, 4, 5, well, actually 6, 7 days. But you can see trading that direction was profitable. Oh, I accidentally hit a different pair. That's why it did that. And you can see here, it's still early in the day, not much range, even though the new beast is sitting there at 98. Pivot point. We, well, let's see, we gapped down. So that means we want to go long. The pivot point's up here. Nice distance from the open. So we want to trade toward that pivot. Only 29 pips range, no rat zone trades now. Once again, we've got the daily pivot at 28.40 and the weekly pivot at 28.45, monthly at 28.70. So look for these targets to hit sometime during this week. As you can see, we've got a new open pivot. We're just 6 pips below. We missed it by 2 pips already. Let's see how close we can get if we don't take it out in this hour or the next. And you can see here we had a 3-ball Friday, playing off that 3. Once again, that would just be another indication to go long. So we're up about, what, 10, 20 plus pips at the moment. In the day, once again, we're just taking the candle color at the line for a long trade. Wick zones, we talked about it earlier, opened in the wick zone and we are out of it already. Holo setup, you see we just had a highest open. I don't know if anybody wants to take this reversal trade at this time of the day, but that's where we are. The inventory retracement bars, you can see we had a long trigger at 19 and another one right here about 25 with a short right around 24. Somebody asked about this. Yeah, this is one of the donational indicators that comes in the 2018 package. And the 2018, just so you know, includes the TRO dashboard. So this is the dashboard, and these are just the RHIRB. And so inside the 2018s, you get the 2017 dashboard. It's only because I didn't get a chance to update it in 2018. There's a couple of things I want to do. So in the meantime, I've just been adding to the old one. And I'm not even sure if I'm going to be able to get to it in 2019. We'll just see how it plays out. One of my favorite trading charts again. Once again here, we're just going long at previous week's open. And it's good for just a handful of pips at the moment. And you can see here, it's slow action. It's Sunday night, so really not much happening there. You can see here, once again, haven't really triggered much. Okay, inside bar. 1 month ago, we had an inside bar, and that inside bar high is here. Inside bar low is here on the monthly. This is the last daily inside bar. You can see we're getting back in here. So if it jumps out of this 28.85, look for a nice movement there. We already had one. Then we had a nice movement to the downside. And the indicator that I'm playing with, this is showing the first day of the month, the high, the low, and the open. And this is so far the high of the current week. And just seeing how far price ranges outside of that area, it's pretty interesting. You can look at some of the other ones. You can see here we're right back in that range. Dollar Canadian, you see here we dipped in, we came rocketed out. See, people like to trade the euro. You can see what happened here. Just that first day, you can see what's going on here. We got the beast. And we got the new beast. Let's see, New Zealand, US dollar. Might as well look at the Aussie, US dollar. You can see here what happened. See that gap? The gap had to fill. But I've been working with this, seeing if I can find an edge in it. But it looks promising. It really does. Just to be mindful of these first day levels and watching the price action, like for the rest of the week and the rest of the month at these levels. And how I came up with the idea is many times day traders like to use what's called the opening range, which can be anywhere from the first 30 minutes or the first hour of the open. And whatever that highest high and lowest low is, they'll put a couple horizontal lines, call that the opening range, and then trade. When price comes back in it, they'll trade the breakout. So just, using that same idea, moving it up to the daily level and then watching that for the, first day of the month, first day of the week, watching what happens. And I'm thinking I might even add first day of the year, but I'm just want to play with this. So if I add it, I need to do it soon. So since we've got the new year coming up. And once again, just looking at the frequency distribution of the range, I think those, you can see this is a 2014, even though I updated, made a whole new frequency distribution indicator that gives the user a lot more power in 2017. You can see here 42% of the time the daily range is going to be 100. You can drop down to the hourly, where you can see here, look for it to be 10 or more pips. Almost 74, 73% of the time. So 7 out of 10 times, that's quite the range. So what that means is, for traders, if you're going long and all of a sudden you see a bar going against you, depending on where your take profit and stop loss is, you can see here that there's a good chance that's going to move 10 pips off of that bar's high to the low. That's the range. So you might want to just keep that in mind as you trade. And just looking here at the upper wicks, you can see here it's trying to break out of this old wick zone here. And that's the dynamic wick zone. You can see it's inside of 2 top wicks, 3 bottom wicks. It's cut across 6 candles and 71 candles are void. And if I remember correctly, trade wick, see, that was a 2011. Yeah, 100 bars. Should probably put 100 in paren so we know how many we're looking at. Actually, here we used 82 bars. And that's right, because depending on how many bars are on the chart, it'll automatically change. I think maybe that's why I didn't do it. So you can see here we just got to refresh. But if you scrunch it up, it will do that automatically. And this is just a trade wicks. That's that indicator, the trade wicks, I think. Nope. This must be the wick bar indicator. Yeah. So it tells you hit upper wick 3 bars ago, lower wick 75 bars ago. Once again, just letting you know where price is cutting a wick, playing the wick zone, trading the wick zone. So, fellow traders, that's it. Weekly open. I hope all you traders have a very profitable week this week. Just keep in mind, it's not what you trade, it's how you trade it. So go out there and drain the bank.